to this session about price delivery. Now, this is a lecture that we are hosting live in our Discord. This is just a little intro that I've recorded for you guys on YouTube. But in this lecture, we're going to be covering the expectations of market delivery versus the reality, and how we aren't going to let that disrupt our overall bias and the directional trend that we have already established within price. So, furthermore, let's get into it. We all understand what we expect from the market, and we all understand that it's not what you're always going to get. It's not what you're always going to get. Now, one of the key elements between the winning percentage of traders and the losing percentage of traders is establishing the understanding that you know a direction that you want price to travel in, and allowing price to angle itself round to the position that you want to trade it from. Now, the main element that we are going to talk about today is mainly down to the mentality that you're going to need for overall trading. This is not going to be a technical analysis session. This is not going to be a strategy session. This is purely for you guys to take away the message that I'm telling you and apply it to what you already know and how you already trade. So, the main element to trading as a whole is the understanding that it is a probability-based game, that you are always going to have a chance of winning or losing at any given time. Now, you guys probably think to yourself, well, we already know this. Why are you telling us this? Because the problem most people have when it comes to either break-even trading, recently profitable, losing, whatever it is that you are doing or whatever stage you're at, it's going to always boil down to one thing. How do you allow the market to displace in your direction? How do you allow the losses to affect your direct actions within the market? How do you allow your wins to affect your direct actions within the market? Now, of course, price delivery is not something that is just going to happen consistently and play out of your zone every time you get to an area and it's going to be bang, bang, bang. Amazing, we're hitting profits every time. You see all these unrealistic expectations from Instagram and TikTok and all of these viral places, when in reality they are nothing more than a fugazi. They are, it's irrelevant. It's normally hindsight trading. It's normally trading view only markups that have already played out. There's no before, there's no after. Whereas many people have come to me in the past and said to me, well, how do you deal with losses? How do you deal with, losing streaks, etc., etc.? And again, this goes back to the same principle when it comes to price delivery. What is it that we are doing on a daily basis? What we are doing on a daily basis is applying a rule set that we have tested and proven that works, and we're allowing that to make the decisions for us, which otherwise would be driven by emotion. Now, that is a very key point, because that in itself is the foundation that many people do not have. I want you all to cast your minds back to when you first started your trading journey, whether it was with me, whether it was with somebody else, wherever it was. When you first started, take yourself and put yourself in that mindset. And now compare that mindset to the mindset that you have now. Of course, if you're brand new to trading and this is one of the first real lectures you've had on mindset, you probably won't be able to do that comparison. But for everyone that's improved themselves drastically, and I know the guys that are here in the Discord watching this live have improved drastically over the time that I've known them. So they are going to be able to have that comparison, which is great. But if you're not able to have that comparison, what the difference will be is pretty large to start off with, but the difference is going to be the understanding of the way that the markets are going to deliver price when they are ready. When they are ready, and only when they're ready. Anything forced within the market is going to give you a loss 90% of the time. Any emotional trades or actions taken during emotional feeling stages, if you were, is going to, again, 90% of the time cause you to take a loss. But the difference between those emotional affected actions and those 90% loss actions, so you're FOMOing, so forcing positions, revenge trading, so you're acting off of emotion, over leveraging, again, acting off of emotion, moving stop losses, you're acting off of emotion. All of these bad habits and all of these bad traits are only delivered by you. You are the defining factor here. They're only delivered by you. Now, the main thing that we always need to remember is, again, going back to what I said earlier, this is a probability game. Probability is always going to lie with an element of risk. And risk is, again, a very key part of becoming a profitable trader and understanding price delivery and the deliverance of profits to your account. Now, price delivery and the way that your account and you grow as a whole is going to be almost a carbon copy of each other. Now, you might be sitting there thinking to yourself, how does that even make sense? How does price delivery line up with my account and how I'm going to grow as a trader? How does that work? Well, in this little diagram, which I'm going to draw so perfectly for you because I'm literally Picasso, it is going to show you exactly what I mean. So the first thing we're going to draw is a is a realistic expectation for any kind of account of a profitable trader. Okay, profitable trader, again, there's no system disclosed in this, purely for a profitable trader. So we're going to put it as PT because we know it's a profitable trader, right? So we're going to start our account at 0 and we're going to take a small hit through our first trade. We're going to take a little win and we're going to watch price essentially establish a move where we hit a big win and it takes us higher than we've previously been, let's say 4 or 5% up, and then we take a couple of losses consecutively, and then we take a small win, then we take a loss, then we take a larger win, then we take another loss maybe, and maybe another loss, another win, and we're beginning to create that price movement. Okay, now of course this is not a price chart, this is a chart overall that is representing your account. Now, what I want you to really think about is how many people would give up at these lows. How many people would give up these lows? I believe a lot, and I know that it's true that it's a lot, because when it comes to the lows, people don't want to know. Whenever I think about trading, I think about it as anything, right? The whole time that you are working your heart out and you are really trying to make something work, and you don't have any time, to go out with your friends or whatever it may be, nobody wants to know. Nobody cares. Nobody wants to know. But when you've got enough money to take all your friends out and, let them party off of your money and all this stuff, everybody wants to know you, right? It's exactly the same thing. Nobody wants to know when price action, or your account, should I say, is dropping down and it's going lower and you're losing money. Nobody wants that. So what do people do most of the time? They walk away, or they separate themselves from the rule set that has got them to this point. When in reality, if you take a step back and stop focusing in on the small losses or the 2 or 3 consecutive losses in a row, and you look at the larger picture, you guys probably noticed what I'd done there, and I copied this first drawing that I'd done and added it to the end. So in other words, maintaining the process of the previous. And what you'll notice is a very solid equity curve. Now, the same thing is going to apply when it comes to a price chart. Now, of course, a price chart is never going to be as clean, and it's never going to be as simple as that. But it is going to hold the same principles, okay? So this is a price chart, so we're going to call it PC. Now, when it comes to a price chart, you guys all know how price moves, and a lot of the time it's going to be something along the lines of this, where we'll have some sort of shift high, then we may sweep a low, run up, take a high, again push down, maybe run the last low, consolidate within here a little bit, sweep this low out, push high again. It's going to run very, very choppy most of the time. Not all of the time, but a lot of the time you're going to see price running to areas that you didn't expect. You're going to be stopped out. All of these things are going to happen, and you're going to turn around to yourself or your friend or whoever it may be, and you're going to say, "Oh, I can't do this. I keep getting stopped out. I just can't deal with I keep taking losses and la 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 la, wherever it may be." And that is a purely emotional reaction to you being incorrect within the market. Now, what I want you to really think about when it comes to price action, what are you doing? You're applying the same rules every time to allow yourself to capture trades when the market permits it. Okay? When the market permits it, you're allowing, you are being allowed to catch trades. Now, when you catch trades, most people are super, super excited to get out of that trade with profit, run around telling themselves that they've made it and, I'm quitting my job and all of this good stuff. But they do not act the same when they're taking losses. And rightly so. Rightly so. You're taking a loss. It's not good. No one likes it. It's not enjoyable. Nobody wants to be involved with that. Everyone wants to be out of the way of that. Yeah? Everyone wants to be out of the way of it. No one wants to be involved. And the mindset that is going to put you into a profitable position is not the mindset that is affected by losses. It's not the mindset that is affected by wins. It's the mindset that is only driven by the understanding of consistency within a given aspect. In this case, trading price action. When you understand that consistency, the lows and the losses become irrelevant, because losses end up being the past, profits end up being the past, everything ends up being behind you when all you are doing is following the rule set consistently, regardless of how well it's working for you on a given day, week, month, year. You understand that when you get to your end point, whether that is let's say whether it's a yearly goal, whether it's a 2-yearly goal, 3-yearly goal, if you have applied the rule set consistently, that your losses will be overruled by your wins. And it's exactly the same that is going to happen with you as a person. If you think about this as your mindset within trading, right? Think about this as your mindset. And I want you to really think about how you used to feel when you first started. Again, if you're brand new to trading, you won't be able to do this, but think about how you feel right now. Okay? Think about it. If each of these points represents emotional feelings, okay? It represents how you feel within the market. If you have, let's get some emojis here. If you have all of these dips as your lows and your unhappy times in price, and then you have all of the highs as your happy times where you are, you're learning stuff, you're excited, you're catching some demo trades, everything's good, everything's dandy. And then we have the baseline, which is straight down the middle of this. Okay? Anything on this side is bad, anything on this side is good. Now, what I want you to do is put yourselves in the mindset of every time something gets bad, you're going to look to walk away. Every time something gets bad, you are going to look to walk away from this. You don't want to learn no more. You've wasted enough time. Forex is a scam. I don't want to be involved with this. This is rubbish. La 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 la. Notice what that is. The same mentality that people have when they see their account going lower. They don't want to be involved. They want to step away. Exactly the same as when everyone wants to celebrate the wins. Everyone wants to, when... Put it this way, like a boxer, for example. If you've got a friend that's a boxer, if you go to a boxing match, you want to celebrate them wins with you. You want to celebrate the wins. You want a glass of that champagne, but you weren't there in the gym, all the hours of the training in the gym where he's sweating his heart out. He's there till 11 o'clock. Exactly the same with trading. No one wants to know when you're taking losses on a daily basis and you're trying to refine your craft. As soon as you start profiting, you start showing them some profits, you start making some money, you maybe invest in a few things, you buy a new car, all of a sudden everyone wants to know you. It's the same thing, but you wanting to know and understand the principles behind how to be consistent. So, if we look at this amazingly drawn chart right here, you can see if the baseline being your everyday normal self, where you're not super excited, you're not sad, you're just baseline you. And then we have our spikes and dips in our understanding of price, and we have our spikes and dips in the way that we feel overall. So on this day, for example, we took a fair loss. We really didn't grasp the understanding of something that someone was teaching us. And the next day, after we really get it, we catch a nice demo trade. Great. We spend the weekend happy. We come back Monday and shit hits the fan, and we end up going back to where we were. If not, we feel worse about where we were. Yeah. Again, the next day comes and all of the stuff that clicked previously clicks back in. You end up becoming really good at it again, and you are now starting to see how people get this. Again, you learn a new concept, you apply it, it doesn't work, it sends you back down below baseline, and consistently the same thing's happening. But what is something that we're recognizing here? We're seeing every time we have this aggressive drop off, whether it's in emotions, whether it's in your consistency, whether it's in your attitude, whether it's in your overall feelings, whatever it may be, if you were to let that lead your decision, so you say, you know, I'm not going to relearn things, you would never revisit above the baseline. You would never revisit above and hit this peak again. Okay? But what I'm trying to show you here is consistently, just like the account, if you make this as a whole what you are going to do over and over and over, you get to a certain point when the baseline becomes the lowest point that you can go to. Because once you've understood concept 1, 2, 3, 4, and 5, and you're applying them, yes, you may have a day where you take a loss and you don't feel as great, but you understand the concepts that you're following. Therefore, you know you can just take a trade eventually and go back above the previous happy stage that you were in. And you're going to consistently do the same thing. Now, 90% of people are giving up below the baseline, which allows them to fall into the non-profitable side. Now, the reason why this happens is because, one, it takes a prolonged period of time for the baseline to become the lowest point. Okay, so in other words, understanding concepts, really being able to walk away from a losing day with the understanding that, well, you know, I'll come into it tomorrow and I'll hit a trade, and if I lose, I lose, and if I win, I win. And again, the same thing. Well, let's say we've taken 2 days worth of partial trades and we've barely scraped 2%. Okay, so be it. I'll wait until tomorrow and catch a trade. I'll wait until the next day and catch a trade. There is none of that. This doesn't work. I don't want to do this. La 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 la. Which is the negative attitude that you are not going to be able to bring with you to a professional standard. Right? It's no different to any other career. If you want to be doing it on a professional standard, you need to understand the highs and the lows and what they're representing within any kind of movement. Okay? Whether it's account, whether it's knowledge, whether it is price action as a whole. So notice how we use the same chart for price action that we did for emotions, because it's going to link up so closely. When you really step back and take a look with a solid understanding, you're going to be able to step back and say to yourself, hang on a minute. So at the moment, we may be seeing a little bit of a drop off in my mentality. We may be seeing a little bit of a drop off in the way that I'm trading. Maybe I didn't hit many trades this week, or all my trades went partials and then stop loss, or partials break even. But I understand if I continue the consistency, I am only going to see results. Because if you continue the consistency and you're not going to see results, then you're not applying something properly, or you aren't applying something that works. Yeah? So, when we're taking price action delivery as a... Okay, I don't know what's going on with this. When we're taking price action delivery as a day-to-day thing, we need to take the same understanding with us. And that understanding is essentially the basis of, if we have a day where price action is not lining up with our statistically proven rule set that we have to apply to the charts, whatever that may be, whether it's ICT, support resistance, whatever it may be, if you are watching this and you don't have a trading plan, I suggest that you do some back testing with however much data you have, and apply some rules that you can consistently put onto the charts and apply to yourself, because that is going to be the defining factor between profitable and non-profitable. Now, of course, many people will say, well, I just trade what I see, etc., etc. That's fine, as long as you keep it uniform, okay? If you are coming to the charts and you don't have that consistent rule set to be able to apply, you are going to have issues when it comes to that consistency curve and having that consistency move with you in the way that you are growing as a trader. Now, what you're going to notice when you do start to apply a consistent rule set, it's going to alleviate the emotional decisions that you would have made earlier, or whenever it is that you decide to apply these rules, okay? Which is also going to show you a lot about yourself. It's going to really give you an in-depth understanding of you as a person. It's really going to show you your flaws. It's going to show you your strengths. And it's really going to be the make or break for a lot of people. Now, this is why any of the videos I show you, whether it's a live stream, whether it's, one of these lectures, wherever it may be, I always say that it is unique to the person. Yeah, it is a unique, systematic way of being able to draw money out of a market. Now, whether somebody decides to, buy and sell chocolate bars on the internet, whether you decide to rent out your home, whatever it is that you decide to do, the reason why you've picked that is because it suits your personality, or it suits you as a person, it suits your lifestyle. Trading is no different. If you have a systematic rule set that does not work for you and you can't consistently apply it, you are going to have a problem. Okay? You're going to have a problem. That's just the baseline of it. That's how it is going to be. Now, some people aren't going to like this. Some people aren't going to, agree with me, but that's fair enough. It's my opinion. And from my personal experience, everything changed when I finally consistently allowed a rule set to tell me what I need to do rather than telling myself what I want to do. What you want to do and what you need to do are two different things. And this is why we are speaking so much about this in this lecture, because price is exactly the same. What you want to do is you want to trade price. What you would like to do is you would like to hit top profit. You would like to not hit stop loss. You would like to get in with a sniper entry and watch it fly and take off to the moon. But in reality, the conditions for you to do that aren't going to be there every single day of the week. That as well in itself is going to have to be secured in your mind as, when do I trade? How do you know when to trade? Because you're going to know, because your criteria is going to be met. If your criteria is met on a given day, then you can trade. But not every day are you going to have that criteria met, okay? So with that understanding and with that overall price action delivery in mind, so in other words, not every day is a trading day, when we come to the charts and we are not confident and checking off what we want to see, what do we do? What do we do? We walk away. We walk away. Simple as that. Now, like I say, there's going to be these, people that trade 1 minute scalpy, super duper, whatever, and say that this is rubbish and you can trade every day of the week, every second of the day, every minute of the day. That may be the case. But if you're applying the system that I use and the way that I trade, this is not the case. And for me, one of the biggest things that I have heard from many of my students, many of the members of the Discord, in general, most people that I have conversed with since I have been at a professional level, is they lose money when they trade too much. Or they lose money when they force trades. They lose money when they are too busy focusing on what they want to do instead of what they should be doing. Okay? So, when it comes to price delivery, we need to establish a directional bias, establish overall what we expect for price, wait for the confluences to tell us that we are correct, or at least give us an idea that we may be correct, and then we wait and sit on our hands until price is delivering to the point we want to trade it from. Remember, as traders, our job is to react to the market, not to emotionally react to how we feel. That is not how it works, okay? So remember, if you come to the market and price action is one, either not delivering consistently enough for you to be able to trade it, two, it's not delivering in a manner that you are able to depict where you'd like to trade it from, or there are fundamental events or external events that are going to affect the way that price is delivering, the safest thing for you to do is walk away and spectate. Spectate is honestly one of the biggest and most useful things that you can do, because you can have a bias, you can have an idea, you can have all of the things that you would have. The only thing you don't have is the risk involved. Okay? So when you don't have risk involved, it allows you to be a statistical minded individual, and you can begin to evaluate how you would have felt during that time. And you will notice over 5, 6, 7, 8 events like this, or 8 days like this, journal them down, mark up price action, and I can almost guarantee you those days you would have ended up losing, or you would have been very lucky to make a profit. Now, if the case is I'm completely wrong and you would have absolutely made a bomb on those days, then forget everything I've told you in this lecture and go ahead and trade every single day of the week. Okay? That's completely up to you. Always remembering, regardless of what I say, what somebody else says, what whoever says, it is solely down to you. It's you versus you. There is no in between. The only thing you need to do is pick one of two directions within the market and be right about that. That's a 50% probability that you are going to be right or wrong. Is it that hard to win a coin flip? No. So why is it that hard to win in the markets? Because emotions are the things leading decisions until you have systematic rule sets. So, a very good example of this, and this is something that I've spoke about a few times this week because I think it helped a couple of people that I know and have taught. Head over to your favorite funded company, whether it be FTMO, whether it be MyFundedFX, all of those other, there's plenty out there. Head over to their leaderboards and take a look at the hit rate of the people that are at the top. Take a look at the hit rate. Most of them average around 50%, which means if they take 5 trades in a week, they're winning 2, they're losing 2, and they maybe break even on 1 more. Yeah? To give you a total of 50% hit rate. Now, would you be happy with that for a week? If I said to you, this week coming, you're going to take 4 trades, and you're going to TP on 2, and you're going to stop loss on 2. If I told you Monday you're going to take 2 stop losses, and then you're only going to take 1 TP on Wednesday and 1 TP on Friday, would you be happy with that? I feel like some people are saying yes, but in reality, if they took 2 losses on Monday, they'd be done and ready to go home for the rest of the week. They wouldn't be trading Tuesday, Wednesday, Thursday. But it's the consistency. It goes back to the same principles. The consistency and understanding that probability will always become your favorable thing is the difference between winners and losers. So I want you guys to all go away and really look at the previous price action that you have traded. Go and look at what it is that you are seeing within price. Have a look how you've behaved to that, how you've responded to what price action is showing you, and how you can begin to improve that. One of the main things that you can always say to yourself is, if I take a loss, I know that I followed my plan. If you can't say that, then you're trading emotionally. If you don't have a plan, then you need to formulate one. Whether it's the most basic plan on earth, or whether it's a 100-step complex plan where the rules are only met once a year, regardless of it, if it works for you, use that system, okay? Remember, trading is unique, and every person has their own perspective of the market. Whether it may be classed as wrong or right in somebody else's eyes is down to that person, okay? So, we all know, obviously, again, it's Friday for us right now, so the week is ending. We're coming to a really nice subtle halt at the end of the week. Not the best price action on a Friday. I know a few people have been wicked out and stuff like that. But again, what are we going to be doing? When it comes Monday, we're going to be applying the same rules, same system, same attitude, same approach, same risk, same criteria, same goal. Everything stays uniform. If we go away over the weekend, we go on a heavy binge, we come back Monday, we decided that we're actually going to change something because we saw this really cool system on YouTube, which is like 100% hit rate and it never loses. We're going to try this week. You end up putting yourself into a spiral of hope, which essentially is only going to lead down. When you can build something that's a lot more powerful than hope, which is confidence, and you build it by consistently applying the same rule set to the charts. So guys, what I would really, really appreciate from all of you is if you could really listen to this with a neutral mind and really just take it in for what it is. I'm not trying to preach to you to tell you that you can be a better trader. I'm not trying to preach to you and tell you that you're losing for certain reasons. But if you really do listen and apply the stuff that I've covered today, you will be able to have a statistical edge above 90% of people that are playing within this market. So always remember, guys, when there's a down, you will see an up. And if you're going up, there will be inevitably some kind of down. But it's the consistency and understanding that you need to apply the same rule set over and over and over again that's going to get you to your end goal. Whether that is buying a house, whether it's buying a yacht, whether it's buying a push bike. Whatever the goal is, it's achievable. Whatever you want to do, you can do it. But you can't do it allowing your heart to overrule your head. Always follow your rules. Always keep a level mind and non-emotional approach to trading. And if you can't do that, step away and reevaluate where you're going wrong. So guys, I hope that short lecture has helped you all understand the basic principles between the mentality that you need to bring to the market, as well as the emotional side of things that are going to affect the way that you do essentially trade and behave within the market. If you can apply these concepts along with a systematic rule set, I can promise you all, almost with guarantee, that you will see a profitability in your trading. So as always, guys, I appreciate you all joining me. Whether you're watching this on repeat on YouTube, whether you're watching this live with me in the trading floor. I wish you all an amazing weekend, amazing week, amazing day, amazing night, wherever you are in the world. I have been your host, as always, and I'll catch you in the next one. Peace out, guys.